Hello friends, my name is Sharad. I am an independent financial advisor. As we move into the last quarter of the financial year 1920, in fact we have just 35 days to go. We will all be doing tax saving, tax planning for reducing the tax outgo. And historically, we have been investing into those traditional products like public provident fund, national savings certificate, endowment policies of the life insurance, money back policies. We have also been investing into those bank FD which are of 5-year tenure. So these are the instruments where we have been investing traditionally. We have also started investing into the new age products, which are new pension system, the ELSS, which is equity linked saving scheme. Now the last two, the NPS and the equity linked saving scheme, are the two equity oriented funds. What I mean by equity oriented funds is that they are investing into the businesses, they are investing into the good companies with a good track record, and the result is that these ELSS funds have been giving a return of 13 to 14% in the last decade. Now the ELSS funds, though we call them new age, but they have been in the market for almost 25 years. SDFC Tax Saver, which has been the one of the oldest, has been the biggest wealth creator over this period of time. Recently I was reading one of the document which said that a lakh rupee invested in 1995, 25 years later, today as we speak, is almost 5.5 crores now, which is a phenomenal wealth creation. So if you are thinking of building a corpus over a long period of time, if you are thinking of taking a bit of risk, but if you believe that by tolerating some amount of volatility you can create a corpus, then ELSS is the right fund. So though I said it's a biggest wealth creator, but since it's an equity, it has a risk. Now what we need to understand, and that is the reason for making this video, was that while your advisor is giving you or shortlisting the ELSS funds to invest, you need to ask some questions, before you can arrive and write a check in favor of the fund. Some of the questions which I can guide you on is that, number one, you should always ask how the fund has been behaving vis-a-vis the benchmark, how the fund has performed against the index. Every equity oriented scheme need to beat the index, need to beat the benchmark. So you need to understand what is the benchmark of that fund and whether it has been beating over a period of last 3 years, last 5 years, last 7 and 10, whatever is the tenure of the ELSS fund. So number one point is whether the fund has beaten the benchmark, and also whether the fund, how it has been behaving and performing vis-a-vis the peers. Now the peers, we need to find out what is my fund, the suggested fund ranking vis-a-vis the competitors. Number two, which is again very important, is what kind of risk the fund manager is taking in terms of the kind of companies the fund manager is investing. Whether the company is a large company, mid company or small company. The large company, these are more stable, they give you more stable returns, but they won't give you very high returns, right? Because these are established businesses, they can give you more consistent returns. But in case you have a longer tenure and you are looking to incorporate, bring in more risk, then probably you can go to a mid cap fund, which is much more heavy on the mid caps or small caps. So need to find out, depending upon your risk, taking ability, what is the kind of, cap exposure is to the fund. Whether it's a large cap, mid cap, small cap or a multi cap, the kind of risk will be completely dependent upon that. Number three is whether the portfolio is diversified, whether the portfolio is diversified or concentrated. Today there are two kinds of way the fund is managed. One fund will have 65-70 stocks spread across industries and sectors. Another fund manager will make it more concentrated. He will try to put more money into selected sectors and selected companies. He will, if he has a conviction on a particular stock and sector, he will be giving more weightage to it, and hence it brings in more risk. So third point, what I'm trying to suggest is ask your advisor whether the fund is a pretty diversified fund or is it a concentrated of 25-30 stocks. So just to repeat, just to summarize what I said, while choosing an ELSS fund, you need to be asking three questions to your advisor. Number one, whether your fund has beaten the benchmark, has beaten the peers, you know, how the fund has been maneuvering in the different volatile environments. That is number one. Number two is whether your fund is a large cap oriented, mid cap oriented, or small cap oriented, or a multi cap oriented, because large, mid, and small have different risk associated to it, and your fund will be volatile depending upon the kind of market situation the fund manager is in. Number two. Number three would be whether your portfolio is a diversified portfolio or a concentrated portfolio. So three questions if you ask to an advisor, and if you can understand what he is trying to tell you, then you will be taking much more informed decision. So I would suggest that don't rush in to invest into the ELSS and close it signing on a dotted line, but make it an informed decision by asking the right questions to the advisor. Thank you.